There's one final piece left in the innovation puzzle: the capital to make these ideas happen. What are today's investors looking for? What do they look for entrepreneurs and startup companies, and what works? To lead the discussion, we've invited Shahid Khan, co-founder and chairman of New York-based MediaMorph, the leading global provider of cloud-based software and services for content creators, programmers, and distributors. He's also managing partner of Meridian Advisory Group, which advises new media technology ventures. Please help me welcome Shahid Khan and our final panelist.
So as they say in New York, we save the best for the last. So it's a very interesting topic, and it flows right into what we discussed earlier. This panel is about making ideas work. And when I was given the topic, it reminded me of what Charles Dickens wrote in his book. It was the best of times, it was the worst of times, it was the age of wisdom, it was the age of foolishness. So it's very similar to what we are going through here. On one hand, you've got great opportunities around growth, internet, media boom in this region. At the same time, we're still recovering from the financial crisis, and there's still somewhat of a political uncertainty here. But as Baron Rothschild said in the 18th century, when there's blood on the street, buy real estate, which means there's a lot of opportunity here right now. And to shed light on that, we've assembled a tremendous panel of very impressive entrepreneurs and business builders in the region. I have Rashid Al Ballaa, who is a leading head of internet conglomerate in the region. He's a proven entrepreneur and a business leader. Habib Haddad is also a very well-renowned entrepreneur and is now running Wanda, which is a community for entrepreneurs where they can get funding, mentorship, a lot of content that helps them around issues that they're facing. And last but not least, Ovais Naqvi is a Senior Vice President at Abraaj Capital, which is the leading private equity shop in the region. He's a sales and marketing genius, investor, mentor, and an entrepreneur. So if you guys don't mind, please start off with a very brief profile of what you do and your background for the audience, please.
Okay. N2V is part of a larger IT group, one of the largest in the region, called National Technology Group. We started by, with the opportunity that we know that the internet industry in the Middle East is going to be tens of billions of dollars in size over the next few years. So we started investing in internet startups, building our own, doing some mergers and acquisition, and created N2V as a holding company and a conglomerate of internet companies. So we do everything from advertisement, payments, e-commerce, social, all kinds of sites, and we invest in entrepreneurs around the region.
Excellent.
So my name is Habib Haddad. I'm a schizophrenic entrepreneur. I've been building startups for the past 10 years now. I'm running Wanda, which is a platform to enable entrepreneurs in the Middle East and North Africa. And we take a really interesting approach because it actually came about by the team's experience and long years of struggling and facing challenges. And the way we approach solving entrepreneurship is by ourselves acting as an ecosystem. We have a media arm where we cover stories to inspire and educate the market. We have an early stage fund where we invest up to $500,000 in startups. And the past year alone, we've done 10 investments. And we also have programs and services. We run our own events, very much focused on the entrepreneurs, and we run other programs as well. One of the very exciting products that we're launching soon is called Wanda Card, for example. And this program is a members-only program for entrepreneurs, where if they get access to it, they get discounts on lawyers, office space, travel, and this is one of the innovative ways that we're trying to actually support the market. So again, from a macro level, we are a mini ecosystem acting in our own way, taking the role of government, private sector, and non-profit.
Thank you. Ovais?
Thanks, Shahid. I work for a private equity firm, Abraaj Capital. But I think the important aspect of that is not necessarily directly what we do, but it's really around how we do it. And I think that entrepreneurial behavior is really important from an investor perspective. I think that investors, if they've done it themselves, that gives them another layer of insight into how it should be done and what their learnings and experiences are. I think we back entrepreneurial businesses often because to a large extent you're backing an individual, especially at the SMC early stage. We've invested in stuff which is startup, kind of powering the ecosystem in startup. Wanda was something that we incubated in-house and then very quickly realized that it's best run by people who know how to do it. So I think, you know, there are aspects of what we do which recognize the importance of entrepreneurism in terms of job creation and economics. But fundamentally, we recognize that there's a way to do it, which is to really partner, to create value, to drive value through, to learn from failure and so forth. And that's kind of how we approach it.
Thank you very much. So to structure the discussion today, I've broken it into 4 components. We'll start off with the ideation phase. We'll focus on the investment and launch phase after that. We'll talk about growth and scaling a business and then possibly exits. And we'd like to keep it interactive, so we'll also open it up for Q&A with the floor. So let's talk about ideation. In the US, where we are today, I feel that we're going through the 3rd wave of the internet boom. The first wave is right when Al Gore invented the internet, and you had all these static websites and transactional businesses. You know, Al Gore did not really invent the internet. But, the second wave is the broadband wave, where all these content companies started putting up their contents, and you had YouTube and Netflix and all that. We feel now we are in the 3rd wave, which is all about mobile broadband, where you have everything that's web, you have everything that's broadband. At the same time, it's mobile. It's on your smartphones and your tablets and all kinds of devices. Where are we in that cycle in the Middle East region?
Well, I wouldn't totally agree with the waves that you've put in terms of the region here. The way we look at it is that we're pretty much behind in any kind of way you put the different waves that the internet industry went through and the media industry went through. So the one biggest problem we had in the past was lack of enough internet penetration. So while those waves that you mentioned were happening in the US in the late 90s and the early 2000s, the Middle East altogether didn't have enough internet users.
You should have sent Al Gore here.
However, today, internet penetration is at good rates. In many GCC countries, it's above 60%. And the regional average is still low because of some smaller countries. But however, if you look at, for example, the big countries, Egypt, Saudi, UAE, Kuwait, Jordan, and such, you find that internet penetrations today are above 40%. Internet penetration in the US in '99 was about 43%. Yes. That was when, you know, the dot-com bubble, you know, was at its peak in a way. So it's no longer about access, and as you said, mobile now, it's 200% in many countries, and everyone have access to the internet. However, what we are extremely behind in is the actual content and services for those companies. And the reason is there are so many opportunities in the region to invest and return of investment. So if you put your money in real estate, you double it every year, or if you put it in the stock market, or well, not the stock market nowadays, but the idea is that there is need for more investment in internet ventures, in media ventures in the Middle East, and the opportunity is just huge. If you see a market like the Middle East, GCC in particular, with all its purchasing power, and you don't see enough e-commerce sites, and you don't see enough social sites, and you don't see enough mobile apps, it just shows you the size of the opportunity. It's huge.
So I think, I mean, yes, there are trends, and you can look at trends that happen in the US, but what's amazing about emerging markets is that we have an opportunity to leapfrog those trends. Yes, static, then e-commerce transactions, then mobile devices, But things in this part of the world, in the emerging markets, you have so much white space, so much huge opportunity that actually you don't have to wait until the natural phases that the US went through. You can learn from that and you can quickly leapfrog against that. Let me give you a few concrete examples. One of the companies we recently invested in is called ShopGo. And ShopGo is, if it were a company based in the US, it would have been any other normal company. But in this part of the world, it has a huge importance. What ShopGo does is it allows offline merchants to go online in a very easy way. In just one click, your back end connects to payment, you have a mobile device, and you also have a connection with logistics. Now that's simple. That sounds like a very simple solution for someone coming from an outside world. But here in the Middle East, you have developers are not used to developing for e-commerce sites. Payment is a bit annoying to hook up with. Logistics company are also not that in tune with the new space. So this company, this startup, found a way to leapfrog against the whole frictions. The internet in general, my definition of the internet is it lowers the frictions to collaboration and to transactions. In the internet world mimics our offline world in everything. And the Middle East today provides this opportunity of leapfrogging specifically in e-commerce and in mobile devices. We have Saudi Arabia has the highest number of consumption per capita for YouTube on mobile devices. So the consumer behavior of the Middle East presents a unique opportunity. Yes, the US has gone very fast, but guess what? We are learning from the US and adapting much faster. Now, with the one difference is that in the Middle East, the business models and the investors are such a way that it doesn't allow for the creations of the Twitters and the Facebooks of the world, only because the Facebooks and the Twitters of the world relied on subsequent follow-on funding from investors until we'll figure it out how we're going to make money at some point. Well, in emerging markets, you have to toughen up, and you can't actually say, I'll figure out how to make money. You have to figure it out early on, and you have to come to become sustainable early on. So this is an advantage or disadvantage. Advantage is because you become a real solid company early on with a defensible business strategy. A disadvantage is because it doesn't allow that serendipitous innovation to happen at the edge as much as it happens in the US.
That's a very good point. Ovais, do you feel the same way?
I think, there are 4 or 5 dynamics here in this part of the world which are really quite unusual. And I wouldn't necessarily even look broadly at growth or emerging markets. I'd look at the Middle East. Number one, I think we've successfully leapfrogged the web piece and gone straight into mobile. If you look at mobile penetration in the region, and within that I'd include Pakistan and slightly wider, I think there's an enormous potential to leverage mobile as a platform, number one. Number two, I think in terms of starting businesses, we need to get much more efficient in terms of recognizing where markets are, where market segments are. I come from a sales marketing background, so as far as I'm concerned, there's no point in starting a business unless you've recognized where the customer is. So we have to understand where the customer is, where the market is, avoid this risk of mimicking and copying stuff that works somewhere else, and start identifying ways of creating models and businesses which are absolutely relevant to the region. Number three, there's an efficiency of capital issue in the region. There is enough money here. It's not like other markets. We have enough capital. We have enough surplus capital. The issue is that capital efficiently flowing into the right kinds of businesses that find the right kinds of markets. If you have 300 or 400 million people and you've got enough money, and you've got enough entrepreneurial talent, there is no issue other than the fact that that capital is not being deployed efficiently. The other aspect is really around failure, which came up in the previous session, the ability to create a generation of people who are able to get up from failure, who aren't looking abroad to identify models, who are looking to create stuff in the region. And the other aspect is really around looking from a regional perspective rather than from local. So looking at businesses which are scalable and which have a regional footprint and a regional potential above and beyond the local. So I think if we can make all of those dynamics work and fully understand how to do them, centralize angel behavior, centralize VC behavior, create common platforms, then I think we've got a potential to really be way ahead of lots of other markets that I can think of.
But Ovais, one of the things that you mentioned earlier, there is a lot of capital here, that's for sure, but people still are more comfortable with bricks and mortar type investments. I buy real estate today, it's going to double in value in the next 2 years. So with that kind of a philosophy, how do you encourage investors to come in and invest in these more nebulous ideas which you cannot actually touch?
Well, in a way, they're not nebulous because, you know, if you look at the kind of behavior that's already taking place, the kind of deals Habib talked about, the kind of deals that even people like JP Morgan have done here, the kind of deals Abraaj and our SMC platform Aureus are doing, the kind of deal that N2V are doing. I mean, people are doing deals here within the kind of space we're talking about. The issue is how we can deploy that capital in the way to find the right entrepreneurs and to create sustainable models. So I don't think anymore it's a case that these businesses are not finding capital. I think the platforms are emerging, but in a sense we need to kind of really drive the right kinds of businesses in the right segments, regional as opposed to local.
So what kinds of ideas are you seeing?
Okay, let me add to that first before I talk about the ideas. One thing we've seen over and over in the region here is that, you know, people, you know, go on a gold rush whenever there is an opportunity. And we've seen this happen in real estate in Dubai. We've seen this happen in stock markets all over the region. We've seen this happen, you know, over and over in the region. Whenever there is a few or enough success stories and the spotlight is on those stories, people, you know, just go on a crazy gold rush and billions of dollars go into that. So the availability of capital, what we need now is a bit of media attention and some success stories that ourselves, Wanda and other kind of early investors into this area are hoping to create, and that would be the catalyst to pull in the rest of the investments.
That's a very good point.
Actually, on that, so the press role is very important, and we see that a lot by, because at Wanda, you know, our press arm, we see a lot of activities happening, we see a lot of potential angel investors. But I think what's more important is for the VCs themselves and for the investors themselves to engage angel investors with them. So one thing we do, on every single deal we invest and we lead, we try to find other co-investors and angels who are not completely familiar with that space, but who want to play that role. And once they start tasting and then they feel, oh my God, it's actually addictive. You know, I can invest, I can see things moving, I can help the startup, and it's actually very human, and it becomes very addictive, trust me. You know, another example is actually Fadi Ghandour, and when he used to invest in Jordan on Oasis 500 Angel event, they had like this room where people would pitch. And after you pitch, you go and pledge that you want to go and invest in this box. And when first, initially, no one would go and pledge, but then Fadi Ghandour, you know, is a very respected angel investor and businessman in Jordan. He would stand up, pledge, and everyone would see him, oh my God, he invests, I want to invest. So that kind of role model on the angel scene is very interesting. The other thing is, you know, we have, for example, here Danny Farha from Beko Capital. Danny was a successful entrepreneur in Bait, and now he's doing angel investment. So I think we need more of those. The cycle is going to kick in, but it's those successful entrepreneurs who have it on, they must invest. So there is a lot of greed in private capital. Let's not shy away from that. The other private sector, you know, CEOs are greedy. They just want more and more and more and more. And it's not just the money and the family wealth and old wealth. It's actually the new CEOs as well are getting greedy. So we need those more to open up. And I think the way we do that is by leading by example and by giving them, some of them, like a sample for them to taste from.
So you're like the Gordon Gekko of the Middle East? Greed is good?
No, not at all, actually. No, I mean, greed, I'm saying for us to open up, I think we play another role. Maybe we can play on vanity, because we can play like on one of those. We can play on self, whatever it is. Because some wealthy individual, they just want to go to parties and say, I invest in a few startups. Fine, we should leverage that as VCs and get them to invest, and maybe that will open up more doors. But it is something that is not happening as much as it should be. For us, the toughest thing is to find a follow-on investment for a company. There are no investors that invest VC style about $2 million to $3 million. Yes, startups can find the $100, $200, $300, $500, but then the next round becomes much tougher. And this is something that I'm not sure where the solution is going to come from, but the good news is that emerging markets like Turkey, China, are looking heavily at the Middle East right now. Baidu opened an office in Egypt. Turkey, I was in an event in Turkey last week in Istanbul, and every single Turkish startup who has grown to a certain stage came to me and said, we want to expand to MENA, we want to expand to MENA. And it actually makes a lot of sense, because same culture, same religion, different language, but you know, guess what? The highest TV series that is consumed by the Middle Eastern, by the Arab world is Turkish soap opera. That indicates that the behavior is similar. The language is different, but the behavior is similar.
Sure. So let's talk about investments a little bit more. In this region, there's also a different dynamic with the family offices, which is, in my understanding, different than what angel VC or private equity investor looks for. And given that we've got all of you on the panel, can you shed some light on what's the difference in the approaches that the family office investors or conglomerates have versus the venture capital or private equity folks?
I can speak from a family office perspective. If you see any business opportunity that would scale, it requires a few things. It requires right management with right experience. It requires that this experience of founders or entrepreneurs or whatever you call them, CEOs, do not have a glass top, so they can think much bigger. It requires money to finance it, and it requires infrastructure, relations, connections, network, etc. Unfortunately, the Middle East is lacking in a lot of those in terms of infrastructure, in terms of different components, having the full ecosystem. And that's what NTV is trying to bridge, that's what Wanda is trying to bridge, and others, are, Oasis 500 and others trying to bridge in different countries. However, all those components from a family business point of view are available. And that's why you see the family businesses growing exponentially, because they do have the money, they have the well-educated kind of second, third generation, they can attract really smart people to come work for the family. They have the network, the relations, the wasta, the whatever you would need to do the business. They have the ability to scale businesses, and that's why you see them grow. But what they don't have, what they're missing, is the risk appetite, because of the because they have so many options and opportunities available, and that is one thing that has to change, and that's where VCs and private equity firms and other liquidity pools would play in.
That's great. Habib?
So I think family-run businesses obsess about protecting their downside and not maximizing their upside. So it's great, and they usually build walls against them because they find a way to make money, and they become rich and fat, and they build the pipes and the wasas and the connections, and they just build walls and say, don't touch me. And I think that's a bad thing. I haven't seen any other family business except for N2V kind of like trying to take risk and opening up. I think if really governments and other open-minded families want to encourage entrepreneurship, they shouldn't build their own conglomerate. They should start by providing liquidity in the market, acquire small startups, show that you believe in other startups and other entrepreneurs, and show some money flowing into the market. If I were in government in Saudi Arabia or in the UAE, I would put this as a policy. I would incentivize family-owned businesses to acquire and to young startups and as a tax benefit or as whatever it is. But this is something that, in my opinion, I'm betting on as one of the potential exit opportunities. You have the telcos, the media businesses, and the family-owned businesses. And I think it's about time for us to see those kind of entities open up.
I mean, from where I'm sitting, I see the world quite differently, actually. I mean, we're fortunate. Abraaj predominantly is investing other people's money. Like all private equity firms, we have limited partners, and we invest in funds through those vehicles of limited partners investing in funds. So most of our money is deployed as a result of limited partners giving their money to us. Now, the reality is a lot of those limited partners, in our case, are family enterprises. They're sovereign funds, they're family offices, they're high net worth individuals. They're investing with us because they believe that we provide a window of opportunity into high-value investment opportunities, that we understand the nature of the dynamics and changing nature of markets where we invest, that we have an eye in terms of where growth is coming, that we have a value proposition that makes sense for them, that we provide superior returns, that we invest the right way in the right responsible manner. I don't see it in terms of the kind of family offices aren't doing X and private companies are doing Y. I see an evolution happening already, which is family offices looking to invest money efficiently, either directly themselves or through people like us, taking a more innovative view as to where to put their money, and looking at ways in which value can be created, starting businesses with family members being supported by other family members. I mean, I'm seeing a lot of that, and I think there's an enormous potential to take that further, to find role models and case studies for more family members to talk about it. But I don't see that as being something that's not changing. I'm kind, from where I'm sitting, I'm seeing it rapidly changing, and that innovation is already happening.
That's actually very encouraging, the way you look at it. So let's move on to growth and scaling. And as you pointed out earlier, Ovais, to really scale in this region, you have various countries, and you may have differences in cultural aspects, slightly variations in dialects and languages. So when you're scaling a business across the region, and you may have a lot of experience doing this, what are the challenges that you face, and what are the opportunities that you see as part of that? Please.
Okay. So scaling is the most kind of toughest and most important part of everything, of entrepreneurship in general. To follow up on what Habib was mentioning about greed, greed is good, but we should be long-term greedy, not short-term greedy. So making $1 million today or making $1 billion in 5 years, I would shoot for the billion. Unfortunately, most of the investments in the region tend to be very much short-term oriented, and how to make money the soonest and the earliest. And from our experience as a family business, as Al Ballaa family, we've scaled so many businesses. So we have Mubashir Financial Services, which is now have 400,000 subscribers in the region, brokerage firms executing in 30 markets, all started in '99 by an idea. And we spent money on it from '99 till 2004, and it was losing money. And then all of a sudden, stock market peaked, and we were the only one ready to scale with that, and did it. We operate the world's largest shrimp farm in Saudi Arabia, about 200 square kilometers of farm, 65 kilometers of shoreline, and it didn't happen all of a sudden. It was 85 till 99, 15 years of continuous R&D and losing tens of millions in it, till it reached a level where we can start scaling it. So if we go into media and into internet specifically, scaling is more about discipline than about innovation. Mm-hmm. So yes, as an entrepreneur, as a startup, you get angel investors, you get early stage investment, you get $100, $200, $500,000 to prove the concept of your startup and get traction. But then once you do that, it becomes a matter of scaling. And unfortunately, most of the entrepreneurs we've seen in the region lack the discipline and ability to start scaling this. So you need to grow the team, you need to grow to bring in much bigger investments, and you need to deploy and execute faster. And that's a normal kind of maturity curve, that because there is enough opportunity, you will end up spending more money in it, and some of that money will go into waste as a learning curve to reach that. But once you have enough of an ecosystem, you'll have the mature people who will be able to scale.
So the reason you think they fail is because the entrepreneurs who are starting these companies don't have the experience and the maturity?
It's twofold. One is the money, as Habib mentioned, so bringing in enough money into the company to grow it. But part of the reason why this money is tough to get is that those bigger investors wouldn't put millions of dollars into a company with young entrepreneurs who just graduated university a couple of years ago. Where if you go into the US, you find most people who are starting companies have worked 5 years, 10 years into big conglomerates. They know how to scale, they know how to operate, they have the discipline, they have these kind of things. So this is an important part where entrepreneurs themselves should mature into it. What I usually say to entrepreneurs is that it's one of two things. Either you have the experience and you're a serial entrepreneur, and then you can dictate your own kind of conditions and seek the investments you want. If you're learning and if you're young, the focus should be on how to make the business successful. Because even if investors take advantage of you and you couldn't raise money without giving a big chunk of your company, no one can take away the name founder from you. So we have examples of companies we acquired for millions of dollars, and they were, when they were sold originally by their founder, They were at 1/10 or even smaller than the size they are today, and it went to another person, then came to us. But no one can take from that original person the name founder. So that person, if they go to any kind of, they didn't make the money. They made a small chunk of the money that the venture did, but no one can take the name founder from them. So they can walk into any investor and say, I founded that site and that business, and now I want more money. And I guess it's both money and discipline, ability to execute. It's experience to do that. And unfortunately, the people who have done big enough successes in the region, you can count them maybe in two hands. So there aren't many of them that you can invest in.
So Habib, you've scaled your business across the region, and I'm assuming Wanda itself focuses the whole region. What do you see as challenges around that?
I mean, listen, so scaling should be looked at as a simple math formula. Figure out your cost of user acquisition, figure out the customer lifetime value for any kind of business, and figure out where you need to spend and how smooth of a curve it is. The problem is in the Middle East is that curve resets every time you go to a new country. So you start, let's say you're testing in your local market. Let's say you're a Lebanese or Egypt or Jordan startup. You're testing in your local market, you see your graph going like that. Now you have to go to Saudi. You have to start from not 0, from -10, because in Saudi to set up a company, it's really hard. It's really, really hard. And then you have to have the connections, all of that. And then you have to start from -10, and then you have to start up. Figuring out that difference of how to minimize it, how to leverage, how to use partners, is something that is not anymore a science, is more of street smartness, and is actually a huge indicative of what the region is about and the competitive advantage. Is because if you are able to do that, it's very hard for others to come and compete. Look at Bait, for example. Bait is a good example. They scaled across all the region, and it was hard for anyone else to come and compete with them, because to do that setup, it was hard. But then once they did that, it was a defensible way for others to come in. But let's talk about two things. We have content and you have e-commerce. Content is easier to scale. And content, to monetize content, you just have to be based in Dubai. You can create your content in back office in Lebanon, Jordan, Egypt, wherever it is, it's cheap. You figure out that you have a good scalability model. Arabic is a common language. And you come to Dubai, you build a relationship with the mafia agencies, you get the money from them, and they cover Saudi and the Gulf, so that's fine, you're done. That's easy. The problem is e-commerce is a bit tougher, but is much more lucrative and has a huge potential. The online advertising space is only about $200–300 million in the whole of the Middle East. E-commerce is about $11 billion, $8 billion actually in GCC alone. So e-commerce is a huge thing. But the problem with e-commerce is cross-border customs, the inventory, and some of the payment systems that are basically, if online payment was enabled, that was fine. But because you have to put cash on delivery, then that creates added complications. For example, Marca VIP scaled, right? And it's one of the largest flash sales websites in the Middle East. They scaled, they're all over the Middle East, they scaled very fast. When they entered Saudi, they said, we actually need to create our own delivery system because we have such things that are very intricate to our business, like cash on delivery, like returns, like things like that. So again, scaling, I think, is not that hard. It provides an opportunity for the local entrepreneurs who know the market to build fences around them, but it also requires some street smartness. And that smartness can come from either the entrepreneur themselves or from investors like ourselves. So a lot of the time when we invest in companies, we think a lot about scalability, and this is one of the major things that we see as an issue for startups. They can easily create and start, but scaling is a problem. But that said, I'm super optimistic about the scalability issue in the Middle East, and the barriers are being lowered down.
Ovais, as outside investors, one of the trends in the US is when investors come in, they replace the entrepreneurs with professional management. Is that something that happens here?
No, I mean, I'm not necessarily sure that that's quite the formula. I mean, I think there are a couple of points that I'll pick up on and maybe respond to that one as well. I mean, I think scaling is, first of all, it depends on the industry you're in. And in my opinion, I think one of the biggest issues that certainly I see in businesses that we invest in also is an inadequate focus sometimes on deepening in your core market and trying to jump onto the bandwagon of adjacent geography before you've even consolidated what you do in your main market. So again, coming from a marketing and sales perspective, the biggest way and the quickest route to generating revenue is to see in your core market who are the segments that you've not yet reached, to embed your relationship with your loyal customers, to go deeper into your core market with new segments that other people haven't looked at. And then once you've got your model completely ring-fenced, then start looking at adjacent geography. So I think the risk of scale is actually a risk around not consolidating strongly enough before you look at expanding. I think clearly there are challenges in the region around and in the world. I mean, it's not just, I was in Africa recently talking to Kenyan businesses about expanding into Tanzania. Trust me, it's as hard to expand from Kenya to Tanzania as it is from Dubai to Tunisia. It's actually harder, because you've got lots more cultural and other barriers. So this is a common issue, whether it's Mexico to Venezuela, or whether it's Kenya to Tanzania, or whether it's UAE to Saudi Arabia. So I think it's important to recognize that how do you resolve that? Well, you resolve that by strengthening in your core market. You resolve it by finding ways to model your business to overcome barriers. You start looking at the physical to digital transformation. What can I do in a way that allows me to move to new markets in a simpler way? You look at alliances and partnerships and joint venturing capability. You look at like-minded companies in other geographies doing what you do for bolt-on or other strategic forms. I'm just saying there are ways around it, and it's not just a case of, I've done it quite well in Dubai, let me immediately go to 10 markets in MENA. You will fail if you do that. So I think, we have to recognize how to risk manage and how to develop a model which is sustainable and scale from there.
But actually, the good news about that is you have the same pipes. You have the TVs, it's the same TV broadcasting. So you have again, the agency, the mafia agencies, the same folks sell to the whole Middle East. Aramex is a regional company. So basically, the partners that you have to build in one market are easier to scale in the Middle East than they are in Africa or are in South and Latin America, because by nature, the bigger companies have been regional. So ride those waves, right, and it's faster for you to do that.
Absolutely. And if I would add to this as well, the best success story in this would be Europe. And you rarely find a successful company in Europe that doesn't operate in 20 languages across 20 different countries in Europe. And here in the Middle East, yes, there are some difference in slang languages, in culture and stuff, but it's still one market. But the obstacle here that's not there in Europe is government bureaucracy, taxations, currency, stuff like this, logistics. So as Habib said, in every country you go through a new learning curve to know how to set up your company, how to do stuff, where you don't have that problem in Europe. But the opportunity is there.
Great. So I'll ask one more question and then we'll open it up. Focusing on exits. Is exit a criteria when you invest in companies here, or do you also invest in companies that can be going concerns and last forever? And if exit is a criteria, what are the mechanisms for exits here?
From our point, we realize that exit is one of the toughest kind of part of investment. We don't believe that there is enough kind of opportunities to exit companies individually, but we do believe one of our exit strategies is to do an IPO for N2V as a holding company with everyone that we invested in diluting with us at a certain point and going public at $1 billion+ company. And our hope to do that by 2016. So that's one exit. I know a couple of companies in the region who are thinking of some sort of an IPO exit, but there is always the exit to multinationals, to telcos here regionally and stuff. But the thing about exit is that usually entrepreneurs should care about not just how much they exit for, but would this company be sustainable after they exit? Right. So it's very easy to go find someone to buy your company at multiples of what you invested in, but it's very hard to make sure that that person or that company who buy this company will actually continue with that company and doesn't shut it down in a couple of years, and then you lose the serial entrepreneurship part of your success. That's
a very good point. Ovais?
Well, at the end of the day, it's a perennial debate, of course, in any investment circle, which is, should the entrepreneur be looking at exit as part of the assumptions around when they start, or is it something that's a byproduct of being a really good business? And the answer is it depends case by case. You'll get entrepreneurs who will be absolutely passionate and adamant that anyone who thinks about exit on day one is by definition not a proper entrepreneur. And then you'll get other people thinking, well, you know, surely the point is to get in and get out. That's the whole point. The reality is there's no proven model. I mean, I can think of businesses which are incredibly successful. You know, I read a story the other day about Ingvar Kamprad, who's still at 86, still owns IKEA. He's built one of the greatest brands in the world, and he's still involved in the business, and it's still private, and it's still family-owned through the trust, and he's still engaged in the business. And he's 86, and he said that I would never float the company because I would never give it away to somebody else, because his sons are already involved. And then you've got other people in the region and outside who are doing 6- and 9-month flips, where they built a very good track record, like those incubation guys in Germany, whose names I can't remember, who've done a very good job, actually very successful, of creating models that are just basically replicate, copy, sell it to the target company and get out of it. So the reality is there's no formula. I've got my own personal view, which is that, you know, it's a bit like, you know, it's like the prenuptial agreement question. I mean, do you go into a marriage thinking about what's going to happen if you get out, or do you kind of go, well, you know, maybe I should just try and make it work? And the answer is this: there's kind of no formula. I mean, the reality is that, in my personal view, you build a business for it to be sustainable, to outlast you, to create value, to make it create some community value, to help it create jobs. And if you're really good, then there'll be a byproduct from that, which will be you'll be able to create and realize some external value. Now, obviously, as a private equity firm, we invest for exit because we have industry conventional holding periods over which we invest and then exit. So, of course, there's a balance to be struck, but I think, really, even from our perspective, we have to create value in a business above and beyond getting out. So our view is not just, well, you know, make the money and get out. Our view is, are we actually doing enough to make that business remain part of an ecosystem even after we leave? So that's an important
That's a very good attitude, Ovais. Your wife must be very happy.
No, she's very happy, yeah. Ex-wife is also really happy.
Let's take a couple of questions. I guess everybody's trying to beat the rush hour, so I'll throw out a couple of more questions here. When we were discussing yesterday, Rashid, you mentioned that you know, the rising tides will break barriers, and success breeds success. So you're seeing a lot of these companies emerging. Do you think that will have a positive impact on the regulatory environment in the region?
Absolutely. We've seen this happen because, you see, what usually frustrates me when I go to conferences and events, and they always talk about education and incubation and this kind of long-term strategies to create an ecosystem for entrepreneurship. And reality is, if you came to this part of the world 30 years ago, it was a piece of desert. It wasn't built with proper regulation or with proper infrastructure or with proper anything. There was money, lots of it, and there were opportunities, and people rose up to the opportunity and built stuff. And this is what usually happens in any industry. We know for a fact the stock markets here had extremely, all over the region, lousy regulations until 2003, 2004, when they started exploding. Then regulators and governments started waking up and fixing stuff. And the same would happen naturally in internet, because we all believe that there is a wave coming. The question is, how high would it go and how long will it take for it to hit? My belief is that it's just a few success stories away. So whenever we can create a few successes and show people that there is money and people made money, like the case of Maktoub, which was the first kind of success that we've seen, if we see a couple more of those success stories, you know, it will just, you know, everything will fix itself, and billions of dollars will go into this industry.
Habib, I think Wanda is doing a very good job making sure that successes are well known. Do you also look at influencing regulatory authorities on how they should look at it?
Yeah, we do. But I'm from Lebanon. I'm, by definition, I don't believe in governments. I don't believe in their efficiencies, and I don't believe that that's a lost game. We believe in grassroots efforts, and we believe that entrepreneurs, they do their shit. It doesn't matter what governments do. They do it. They just do it. Regulations are going to come and are super important. Government has a huge role. But unfortunately, we can't wait for governments to wake up. In Jordan, where Fadi was talking about the entrepreneurship ecosystem, just yesterday or 4 days ago, they passed a law to censor the internet. I mean, there are some issues happening in this region. And I think, you know, one thing is, as entrepreneurs, we need to build our own communities. We need to build our own support ecosystems, and we cannot rely on governments too much. So that's one thing that we need to be very, very careful about. So as we build those and as we change the mindset, then we can be hopeful, and we can be hopeful that there will be some minister that will have a new mindset that will change. But the current regimes, the current governments, and almost all the countries in the Middle East are not yet completely internet savvy. Hopefully the new generation will come and will change that. But again, I believe in grassroots efforts. I believe entrepreneurs should focus on creating value, building jobs, and adding economical success to the region, and then the rest will follow.
Well, I'll actually to the panel. Any word of advice for the budding entrepreneurs in the region?
I mean, I think there are 2 or 3 aspects. One is, I guess, I'd mirror one of the points earlier. I mean, I think there's a lot of entrepreneurial activity here which is not rooted hard enough in enough insight into the market, enough understanding of operations. I mean, I think that 4 or 5 year period of doing something else before you start something is absolutely key, in my opinion, which is understanding how a business works, identifying what the strengths of a good business are, understanding how to find your market, understanding how to find the route to your customer. I mean, there's too much stuff that I'm seeing which is kind of hobby rather than deep-rooted sustainable business. And there's an enormous risk there, because a lot of it is down to my original point about surplus capital. There's a lot of money that can go into lots of bright ideas, and the trouble is we're in that early stage of the cycle where failure hasn't happened yet because everybody's still excited about doing stuff. And the test for me of entrepreneurship in the region is going to be when business goes through either the full cycle of exit or the full cycle of seeming to fail. And what do those people do? Do they carry on and just dust themselves off, as Knife said, and carry on? Or do they go, well, I started the business and it didn't work, so therefore let me go back to college, or let me try and get a job in HSBC? I mean, that's not the way forward. The way forward is really to try and understand your market, build a business. I think the key is, surrounding yourself with people who are good at the things that you're not good at. I think I've started a business in the past. I think there are a couple of big mistakes I made. One was surround yourself with people not like you. Surround yourself with people who are good at what you're not good at. Number 2, don't try and invent a sales channel. I mean, find a route to the customer which is already there, and then on the back of that you can find ways of getting to the customer which build on the strength that you have. So inventing the wheel is quite hard, and trying to build a business with people who are exactly like you is an enormous trap. I mean, build it with the guy who's good at finance, build it with the guy who's good at sales, build it with the guy who's good at operations. I mean, I'm not talking to the audience here, I'm kind of talking to the people who are going to see this on YouTube and so forth. So far be it for me to teach some of the eminent faces I can see around me, but I think those are the things that I think of as entrepreneurial kind of learnings for me.
That's great advice. Habib, 10 seconds, quickly, advice to entrepreneurs.
Great team, and distribution. That's 6 words.
My advice would be, as I said, long-term greedy. So what I usually say to entrepreneurs is that look at the region opportunity when it comes to the internet. If we agree that there is a $10 billion opportunity over the next 3-4 years, now how many people in the Middle East are able to build a startup today, or are technical enough or are geeky enough to do a startup? So let's say there are 5,000 of them in the Middle East, and I'm being a bit generous here. And those 5,000, if this wave hits and billions of dollars come into the market, they will all benefit. Now, it's up to you as a potential entrepreneur or as a person to decide how much you want to benefit. There are those who will benefit by tripling their salaries, and that will happen. And there are those who will benefit by making billions. There is a big difference in between.
So greed is good, but
exactly.
Think long term.
So what would make you make the most money then is experience, knowledge, is contacts, relations, communities, how many people you know, how many ways of of doing stuff. So don't focus on making your money during this year or next year when you know you can't make the money there. And I always give the example that, MBA students from Ivy League universities graduate and they go work as interns in some, Fortune 500 companies. Why would they do that rather than go work for $10,000 or $20,000 salaries? Because they want to learn, they want to build their connections, their relations and stuff. And this is exactly the point Ovais was making. Don't focus on doing the startup now if you don't have what it takes for it to happen. Go work for a successful company that you would learn in, drop out after a few years, and then if the wave has hit, there will be plenty of cash. People will be throwing millions at you to invest with you.
Thank you very much. Please give them a big hand. Thank you. Great. Thank you.
Thank you all so much for concluding our day with such an interesting discussion. This brings us to the end of the Abu Dhabi Media Summit. In behalf of 2454 and everyone from the Abu Dhabi Media Summit team and Publicis Live, we thank you all so much for your participation. Please feel free to head to the lobby. We're serving some coffee, and thank you so much for attending.